Allstate. We are a joint venture between your parent company, Agent on Realty, and myself, 50-50 ownership. A little bit about the offices. We have an agency manager, Lisa Jennings, who manages most of the operations and manages staff. In the West Ashley office, our sales associate who deals with a lot of your buyers is Terry Murphy, and she's actually a former agent-owned real estate agent and came over with us. And then in Mount Pleasant, we've got Kimberly Bessinger, who also used to be with agent-owned with relocation, I believe, right, Liz? And she's doing a great job for us with sales. Talk to you a little about what we offer. We have obviously homeowners insurance available, condo insurance, landlord, renters, boats, jet skis, mobile homes, automobiles, flood insurance, financial services. So just the full range of insurance products. And truly right now we have more products available to your buyers than we've ever had before, and also for you personally. I'll talk to you a little bit about the concept of insurance versus self-insuring. The concept of insurance is a risk spread over a large group of people so that no one individual within the group has fear of financial devastation. So in other words, you as insurance consumers and your buyers are consuming insurance and putting that pool of money into a company, and in the event that you have a claim, you'll be paid for that. Now, you probably in your lifetimes and your buyers in their lifetimes will probably never pay enough insurance for, let's say, a $150,000 house. But you're going to pay a smaller number so that someday if you have a claim, you have a total loss, that the group will be able to afford to pay for your total loss. And that's the concept of insurance versus self-insuring. If we have a buyer that paid cash and they start talking about, well, I'm not going to get insurance, I don't have a mortgage, I'm just going to self-insure. Well, then if they buy a $150,000 house, then it's going to be out of their pocket. If the house burns down, it's out of their pocket 100%. So that's the difference between self-insurance and having insurance. How much insurance do your buyers need or do you need? And how is that value determined? It's really determined by the rebuild cost. A lot of people talk to us about, well, the purchase price is X, why am I paying Y? Why is the coverage Y? If you purchased a house for $150,000, the insurance may be more or less. It really depends on the situation with the house. For example, the land we do not insure. So you would take the land value out of the purchase of a house and not include that. Some interesting things that are happening in today's market that we haven't seen in a long time are that if you purchase a house, let's say it's a foreclosure or something like that, and you get there, people are getting really good deals. Normally it would be on the market for $200,000, only paying $100,000 for it. We may be insuring that for the $200,000. And the reason is it's the rebuild cost. It's all the insurance companies are looking at. What it would cost to take that house and from the ground up and rebuild it with everything brand new. So that's the difference between the purchase price and rebuild costs. Again, land is not included. Typically when we see on the beach stuff, the vacation stuff on the lakes and things like that, the lots are sometimes more valuable than the house itself, but we don't include that in the insurance valuation. There's two types of insurance that are out there. There's ACV, or actual cash value, versus replacement cost. An actual cash value includes depreciation. So if you have an actual cash value policy, typically less than your standard replacement cost policy, the reason is that if you have a loss, the house burns down, there's lightning strikes the house, and you lose all your electronics, they're going to depreciate the value before they pay you for the loss. So if you have a 5-year-old TV, you may only get $100. If you have a replacement cost policy, then it pays for whatever like-in-kind television, like-in-kind whatever content you have, what it costs today to replace it. So if it's a 5-year-old TV that was a 20-inch flat screen, if you bought it 5 years ago, they're gonna replace it with today's brand new like-in-kind. So a big difference in the settlement in a loss between actual cash value and replacement costs. the price really isn't that much different. So we encourage people to take the replacement cost policies. Sometimes they're looking for a deal and they get an actual cash value policy, but really not worth the difference in the price. I'll talk to you a little about some of the current factors in affecting rates nationwide and affecting insurance overall. Rates have changed quite a bit here lately. Claims history and credit are the three factors that you need to be aware of with your buyers. Some of the reasons that rates are being affected right now: natural disasters, hail, tornado, hurricanes and floods that are going on, environmental concerns including mold and fungus, terrorism, the threats of terrorism are higher than they've ever been before, and faltering investments. Those factors really affect the rates today, and rates are as high as they've ever been for homeowners insurance. When you talk about faltering investments, what does that matter? Why does that matter to an insurance company? Well, insurance companies take all the premiums that are paid in to a company in a year and they invest that money. They just don't make money on the premiums. They try to invest that money and get a return on that. If they're not getting a decent return on that money, then they're going to have to increase their premiums. So faltering investments that are going on, the stock market bonds and things like that are not really paying what they used to. So you're seeing a lot of companies having to increase their rates. Another thing that you need to be aware of that can really be a fly in the ointment when you get ready to get your buyers to buy insurance policy is there's something called a CLUE, and that's the Comprehensive Loss Underwriting Exchange. And what that is like the medical records for yourself. Your medical records go with you throughout your whole life. So anybody can access those medical records to see what history you have. For example, if you're trying to get a life insurance policy, or you're going to go work for somebody, sometimes they can access that. So your medical records, the parallel to that in the homeowners insurance world is CLUE, and it's a national database that any insurance company can go to and find out what claims history the individual buyer had. So John Smith is buying a house from you, and they're going to get insurance, and you're thinking, well, that house usually insures for $600 or $700, but then you find out that he had 2 water claims last year in his prior house. Well, he gets excluded from a lot of companies out there. So that is something that you won't know until your buyer starts talking to insurance companies. So they look back 5 years for losses, and it's used for underwriting an individual and or a property. Some companies use the CLUE history, the national database, to find out if there was a water loss in a particular house, and they may exclude writing that house because there was a water loss in the last 5 years. It also includes 0 payouts. So just because somebody didn't get paid for a claim, that's still on their history, and it's important. So we try to counsel our existing customers on this information, that the CLUE history is long-term. It stays out there for 5 years. So if you have yourself or a client that has a claim, and let's say they have a $500 deductible and they had a water loss, well, if I find out it's going to cost $600 to repair it, does it make a lot of sense to file a claim, either yourself or your buyers, for a $600 claim that's going to be on your history for 5 years to make $100? Because you got a $500 deductible minus the $600 leaves you $100, what you're getting out of your pocket. So it doesn't make a lot of sense, and we counsel our clients on that. The long-term approach is you don't want to file a small claim with a deductible like that. The other thing that is affecting rates for homeowners insurance is credit. Some companies are using credit for pass or fail. Either they're going to let somebody buy insurance from them, or they're going to tier their price based on the credit. So the better the credit, usually the cheaper the price, or the more options they have for insurance. If they have really bad credit, be aware that they may be limited on the companies that will write them insurance, companies that are available for them to write insurance. It is different than a mortgage score, than a FICO score. Insurance companies use different factors, but it's fairly close to what you're seeing. You see somebody with a 500 credit score, they're probably going to have a pretty bad insurance score also. And that's a factor that you won't know about, again, until they talk to an insurance company. So that customer that you think is going to get an $800 premium for their homeowners, when you do the qualifying for the mortgage, it may end up being $1,600 because they had really bad credit and maybe some losses also. Flood insurance, another thing. I know not everybody who's listening are on the coast, but any body of water, especially rivers and streams, can flood at any time. And that is a thing that really messes up a lot of closings. I know here in the Low Country, it messes up a lot of closings when people don't think about that and they wait till the last minute. And there's some steps that need to be done to get a flood insurance policy. So please be aware that flood insurance policies take a little more time and they need to be done in advance. And even if they're not in a mandatory flood zone, you need to get your buyers to consider buying flood insurance. Any type of rising waters in a neighborhood. We had this a couple of years ago up in the Goose Creek area. There was a lot of rain and a storm drain backed up, got a lot of debris in it. Well, they weren't near a river and they weren't near the ocean, but they had a lot of houses in the area that had flood damage. There is no coverage with a homeowner's policy for rising waters, so it's important to have a flood coverage for those type of losses. How to help your client. The best thing you can do advice-wise for your client and to help you get to closing is to get them started looking for insurance as soon as possible. As soon as you get a ratified contract in place, let us talk to your client. We want to make sure that you get to closing as soon as possible and as cleanly as possible. And we can help with that. We can take that out of your hands, the insurance part of it, through the many companies that we have available, through Allstate, through the brokering that we have available, through other companies that Agent Owned has contracts with. We can get insurance for the customer. We can get affordable insurance for a customer, and we'd be glad to help them. Again, we can provide 100% coverage for your clients. Any customer that you have, we really have options now for 100% of the risks that are out there, whether it be a landlord policy, a condo, things that we haven't had options for in the past, we do have now. So again, let us help you with that. We're here. You can call us 24/7. We don't always answer 24/7, but we do have voicemail available, and please call us at any time. I do have, I think we have up on the slide, great. I have our toll-free number for those of you who are out of town. It's 888-728-1180 to make it a little easy for you and your clients to talk to us. And then we have our two offices located up on the screen right now. Great, we have some questions, Liz says. I can't read them, so Liz, can you help me with that?
You might need to repeat them because they can't hear me.
Okay.
Yvonne Smith from Anderson asks, is there a site where an agent can go to verify previous insurance claims on a property prior to contract? A buyer should know if the seller collected from an insurance claim for roof damage did not use the funds for that purpose. Doesn't the claim affect the premium for the new owner?
Yeah, Yvonne Smith from Anderson asked a question about prior claims. Can a private party go out and look to see if there's been a claim on a property? There is no access for the general public for the clue history for that database I talked about. Unfortunately, you have to go to an insurance company to get that information. Most insurance companies do not underwrite on the dwelling itself. Most insurance companies today underwrite based on who is moving into the house. So the people that were there before, if they had a water loss, the insurance companies are really more concerned about who is coming into that house. I can see where you guys would want to know if there was a water loss before, but I know there's a disclosure, I believe, Liz, on contracts that they have to disclose water losses, for example. But that is not really a concern for most insurance companies. They are looking for what is the profile of the person coming in? What is their credit history? What is their loss history for the people that are moving in to the house? That's what they're concerned about, the future claims in that regard. Good question.
Yvonne also asks, when you say credit and claim history affects the premium, is the claim history being considered on the new owner or the house they're buying?
Yeah, and again, it is, yeah, the question is the credit and claim history, is it on the new owner or the house that they're buying? And again, it is on the new owner for most companies. There's a few companies out there that underwrite the dwelling to see what the losses were in the dwelling, but none of the major companies do that to my knowledge. Not Nationwide, State Farms, and Allstates do that. They typically are looking for what is the history from wherever they came. They want to look at that profile to see, are they careful with preventive maintenance in a house. That's a big issue. So the past history shows that they've been careful with a house in the past. They haven't had a lot of claims, small or large. And when they move into the house, what's the future predictor of the type of claims that they're going to have?
Claire Willis wants to know, do you have outside lines you work with for our clients who have bad credit?
Yes, we do. We do have, yeah. The question is, do we have outside lines other than Allstate in the event we have somebody with bad credit? And yes, we do. We do have some companies that do not use credit for rating or for qualification. So we do have that availability, and that is a niche that we fit those customers into. Good question.
People are saying they can't hear me when I ask questions. Explain to them it's on purpose.
Yeah, I'm not allowing Liz to have a microphone. No, yeah, she doesn't have the microphone. We only have one in the room. I'm sorry that you can't hear her.
How long before closing can you get a binder? Ask Wally.
Yeah, the question is, how long before the closing can you get a binder? I can speak for Allstate and most of the companies that we represent. We can get a binder up to 12 months prior to the closing, so that should handle most of your situations. Some companies have different rules, but the companies that we have through Allstate, we have that flexibility to give you a long-term binder, and that's really good when there's storms coming, especially during hurricane season, or whatever reason that you need to get that binder that far in advance to get the financing.
Please discuss assumption of flood policies. How come the seller must generally approve this before it's allowed? It's a delay that sometimes causes last-minute delays. Just doesn't seem that the seller needs to have a say.
Yeah, the question is assumption of an existing flood policy. Why does the seller have to approve it? It's not really an approval of the flood policy being assumed. What happens is the existing flood policy is in place and in force. It's an advantage to the buyer to get that policy transferred to them or assumed to them, and they have to sign off on that. And they also have to get some documentation, because it's going to save the buyer some money if they do that. So if you can put that in your contract or talk to the seller's agent about that prior maybe to getting the contract signed, it's going to help. It's going to save them a little bit of money in doing that, and it's going to save them from having to start the application for the flood all over again. So it is an advantage to do that.
And Deborah Webster says, I have a buyer now getting ready to look for insurance. Can you help them? Can Wally help them?
And where is she out of?
Florence.
Yeah, yeah, absolutely. Please, we want to talk to, I think, yeah, Deborah Webster was asking that if she has a buyer right now, can we help them get insurance? That's why I'm here. We're absolutely here to help you. In fact, call right now. Everybody's in the office, 888-728-1180, and they'll be glad to talk to you and or your buyer about the options that we have available for them.
And Stan says, what if we have the binder and the property does not close on time? What do we need to do?
Yeah, Stan asked if we have a binder and for some reason or another the closing doesn't happen on time. So you have the insurance binder in place for the 28th and you find out that it doesn't close or didn't close on that date. That's very important to an insurance company because they are on the hook for that property. And if that buyer didn't take possession of that property, then there's obviously a problem there. And it's going to cost the buyer some money because they're going to have an extra day or two or a week or whatever of insurance costs. So it's very important for the buyer's agent to let the insurance company know, and or the buyer, to let the insurance company know that the closing did not happen on time, and they're going to have to reissue a binder and cancel the previous binder. But that's very important to insurance companies.
Boyd wants to know, can the customer go online to make the application?
The customers, for homeowners insurance, customers cannot go online to do an application. They can provide, we have through the agent-owned website some forms that can give us basic information, but to actually go online and to fill out information and to get a price, it's not possible because all of the many variables that go on with homeowners insurance. For auto insurance, yes, we do have that availability. Through our website, you can go on and get a actual price, put in your Social Security number, your VIN numbers for your cars, and get a price. But in today's world right now, we're not there yet for homeowners insurance because of a lot of different variables. But good question.
I was thinking a while ago, why could you talk about, again, emphasize why the Manning and Sumter and Anderson people need to think about flood, because they think they don't need to.
Yeah, Liz brought up about flood in other areas like Anderson, maybe Florence, Manning, Santee, why flood is important. And again, as the example I gave, you don't need to be near the ocean to be worried about floods. Talk about Nashville last year. Talk about Atlanta a few years ago. Any type of rising water is not a part of a homeowner's policy. So any losses that would incur from rising waters are not covered in your homeowner's policy. So, and in those areas typically that we're talking about, you're not in what's called a mandatory flood zone. So the rates are very cheap. For a $150,000 house, you're talking about, not much more than $300 a year for flood insurance. So that can really help in those situations where the drainage system in the neighborhood from flash, a lot of rain or whatever, they get backed up and the waters rise. And if anybody is on a slab house, absolutely, please make sure that they are considering flood insurance because those are obviously the first ones to flood on a slab house. Crawl space, not as likely, but still certainly important to have as an option.
What about earthquake insurance?
Earthquake insurance, Liz is asking, should people have earthquake insurance? I tell you, that is the one that scares me more than floods, more than hurricanes, because earthquakes can have such devastation and such a wide area of damage, and it's not very expensive either. And most people do not consider it. They only think about San Francisco, California for earthquakes, and we have an epicenter right here in the Low Country. It's actually right between Somerville and Charleston, and it is a scary thing. I know there's some other ones up closer to the upstate near North Carolina. There's a few faults, but something that people really need to consider is earthquake insurance. And we have a hard time getting people to consider that. But I would reference Charleston Southern University has a website that they track all the seismic activity in the area, and you would be amazed at how much activity, how many little small earthquakes we have every year. It averages between 20 and 50 seismic activities every year. So it's not the little ones we're concerned about, it's that one big one that can happen. And good question. Boyd asked, can we write insurance anywhere in South Carolina? Absolutely. We are licensed anywhere in the state of South Carolina to write insurance. And we would love to help the buyers in Florence and in Manning Santee and in Anderson and in Columbia. We can help them. And once we get a policy in force, they can go to any Allstate office anywhere in the country, really, to get service. If they want to service locally, that's available. That's a part of our contract as Allstate agents, is that we can serve it. We serve any customers, any other agents' customers. That's part of what we do. So we would love to help your customers. We know agent-owned. We know the way y'all work, and we think we have a seamless way of working with y'all. So let us try to prove that we can do it for you and help your customers out.
What about the fact that you're in Charleston and I'm in Anderson?
Liz was asking about, Anderson agents, and we're in Charleston. Again, in this world, in this digital world, as we're seeing right now, being on this conference, time and space, it really doesn't matter these days. We work 24/7 from the standpoint of our phones are answered 24/7. We have emails, and I have a cell phone, so we're available to help your customers really anytime. Distance doesn't matter. In the event of claims, in the event of somebody need to go out to inspect the house, we have that in place with Allstate, with our Allstate network, that if you buy the policy from us, at our agency, and there's a claim, we have claims professionals up in that area. We have inspectors up in that area that can go out there and look at the house and service you.
The other thing is, they can't hear me, so.
Okay.
I was going to ask you to give some suggestions. Examples like, remember the one in College Park that almost didn't close? Okay. If a home does not close on time and insurance paperwork needs canceled, the deal is back, and then the deal is back on. I know it's not favorable. Do you have personal binding authority until the paperwork can be done?
The question is if there's a binder in effect and the closing doesn't happen, I guess the closing date hasn't been decided.
It can't be. It got canceled.
It got canceled. Okay.
And then it comes back live.
Okay. So if the closing doesn't happen as planned, there is a binder in effect for a certain date, and the closing is actually going to be later on. Do we have personal binding authority on that? No, we can't do that, but all we have to do is go in the system and make that request, and it happens instantaneously. Some other companies, some of the broker companies, do have to go through their system, and it does take a little bit longer, sometimes 24 hours, to change the effective date. But it is able to do. No individual can go out and represent just on a word, just on a signature, the changing of a binding date. It needs to be done from the insurance company. But again, we have access to the Allstate network to be able to do that ourselves based on the criteria that we put into the computer. Some of the other companies, again, we may have to go to that company, some of the broker companies, and get that authority in writing before we give it to you. Liz was also asking me about flood and grandfathering. Flood, for those of you who deal with a lot of flood properties, can be very tricky sometimes. It is a FEMA product, so it's the federal government, so it's got a lot of wording, a lot of manuals. We know that information backwards and forwards. My staff is trained on flood quite often in the available training because it is something that can trip up a closing. And more than anything else that I've seen, I don't know about you guys, but that's one of the biggest things, probably other than financing, in a flood area. Flood can really trip up a closing. So grandfathering is an option available that can actually help in the event it's an older house, the floodplain has changed in that area. We can go back with documentation and get a lower rate based on when that house was built and prove to the FEMA that it was built to code at that time, even though the flood base level has changed, where the rate would be, a higher rate normally if it was rated today and built today. But we can go back and do some grandfathering, and it's just one of the things that we do because we know the flood policy so well to help some of your buyers. I know we've had several situations where people have come to us at the last minute and say, this flood rate is crazy, what's going on? And we've looked at it and been able to grandfather and cut the rates, sometimes into a third of what it was. But those are some situations that need to be looked at.
How do you determine, or how does one determine the most appropriate deductible for homeowners policy?
The question is, how do you determine the most appropriate deductible for a homeowner's policy? It really is an individual decision. We really counsel our clients on, we look at their claims history in the past. If they've had a lot of small claims, we recommend that they probably have a lower deductible. If they haven't had any claims in the last 10, 15 years, we certainly try to encourage them to get as high deductible as possible because over time you're going to get paid back. The higher your deductible, the less your premium. The lower your deductible, in other words, the more money out of the pocket, possible money out of the pocket of the insurance company, then the higher the premium. So that's the difference between the deductibles. If you have a very low deductible, if you have a $100 deductible on a homeowner's policy, your rate is going to be a good bit more than somebody who has a $1,000 deductible. Today, a lot of the companies that we write for, and Allstate is included, the minimum deductible that we can have is $1,000. But there's some old legacy policies out there with a $100 deductible. But that's in this day and time, a $100 deductible is a little crazy to do because the price will be prohibitive. All right, if anybody else has any questions, if you could type it in real quick. Other than that, I'm sorry about the slides coming up a little late. I did want to go back and show the pictures if I can. The first or second slide. Just so you can put a face with some of the people that maybe y'all have dealt with in the past. And plus, I put together these very pretty slides, so I want you to see them all. Yep, there's Kimberly Bessinger. She's here in the Mount Pleasant office, and she deals with, I know the Mount Pleasant agents and Goose Creek, Somerville, and Moncks Corner, I believe are the primary ones that she deals with. And then we have Terry Murphy. She's in the West Ashley office, and she deals with the West Ashley office, Manning, Santee, Florence, and Anderson. I believe are the primary ones that she deals with. So they're there to help you guys. And this is Lisa Jennings, the agency manager. She kind of catches all. She manages the staff and manages a lot of the escalation questions that happen from a day-to-day basis. Yep, we have another question.
Did I understand you to actually say that you insure mobile homes? Can you insure the mobile home has been actually, if the mobile home has actually moved more than once? Other restrictions on insuring mobile homes.
Yeah, Yvonne is asking, can we insure mobile homes, and can we insure it if it has been actually moved more than once? Yvonne, that's a new one on me, the move more than once. I have never heard that as being an underwriting criteria. We do have mobile home available through several different companies now that we haven't had in the past. So yes, we can do mobile homes. I don't know which companies have the moving restriction. I would have to check on that and get back to you, and I will send you an email on that particular question. All right. Well, if there's nothing else, I appreciate everybody's time, and again, sorry for the small technical difficulty, but this is my first one of these, so we'll get better. But I appreciate your time, and hopefully it was worthwhile. If you have any questions for me personally, my cell phone number is 843-224-3932. If you ever can't get a service that you need, you have a problem or whatever, please let me know about it, because we don't get paid unless we write the policy, so it's important to us. So be glad to help you in any way I can. I think we got one more question.
When a quote is being obtained for a customer, how should we make sure that we are comparing apples with apples?
Really good question. When a quote is being, when people are out getting quotes, how can we make sure that we're getting an apples to apples quote? Well, if you're going to do that as the buyer's agent, you really have to look at the deck pages on both policies. A deck page is a declarations page, or the quote would show the coverage amounts. The coverage amounts and also what is covered. There's two factors there. How much coverage is going to be on that dwelling? Is it going to be a $200,000 policy? Is it going to be a $300,000 policy? The price is going to be completely different. What is the deductible involved? We would be glad to help you with that. We'd be glad to take a look at another quote and compare to see if our quote is apples to apples or not. Sometimes we're a lot lower, and people want to know why. Sometimes we're a little bit higher, people want to know why. We'll be glad to compare. Keep in mind that a lot of people are afraid to show insurance companies their competitive quote, and it's kind of funny in our industry because we are tariffed. We cannot change the price because you got a lower price somewhere else or you're higher somewhere else and we're going to raise the rate. The rate is what the person qualifies for. We cannot change that. It's state law that the rates are going to be what the rates are. So a lot of people are shy about showing us the quotes, but it doesn't hurt the buyer to show us the quote. It would just help us have more information to make sure that they're getting a competitive quote that's accurate, depending on their need. And that's what we try to do, is find out what their needs are, not just quote the lowest price, but find out if they need $300,000 worth of liability, or they need a little bit additional coverage on jewelry or something like that. That's what's important, to make sure they have the right coverage, not just that they have the cheapest price. And one last thing I will talk about, because we've talked about this in meetings before, but it's important. I know that buyer's agents are real, a big concern is obviously getting to closing, and we're certainly here to help that. But please, want you to understand that there are differences in insurance companies. There are small insurance companies that are just starting up, just coming to the state, haven't been around a while. They don't have a lot of money in the bank. They don't have a lot of reserves. Sometimes they come in and they buy market share. Just be cautious of that, because your buyer may have a bad experience in the event they have a claim. They may not be able to. They may not be able to, especially in the event of a hurricane. That's when the true test of a company comes in. There's a lot of companies that were here prior to Hugo that are no longer here anymore because they didn't have the reserves, they didn't have the financial capacity to pay the claims. So just because somebody got a really cheap rate, it didn't really help them in their time of need. So that is a concern. If you're talking about, you're comparing a State Farm, a Nationwide, and Allstate between each other, yeah, that's going to be financially strong companies to compare. But if you have XYZ company that comes into the mix, just beware that price that's a third of everybody else. There's a reason for that. They don't have the reserves. They probably don't have the claims people maybe in the state. So I've had experience with customers that had these other companies, and they had real problems in getting their claims solved. So there is a difference in the price, that's why these companies charge what they charge, because they don't have the capacity to handle a lot of these. So my cell phone number, one more time, my cell phone number is 843-224-3932. And again, I'm here to help you in any way I can. To do the quotes and things like that, again, please call the office, because they're there in front of the computer. I'm going all over the place, and I'm not as versed on quoting as they are, because they do it all day long. But our toll-free number to the office is 888-728-1180. And any other questions? Okay, great. I thank you everybody for their time, and we look forward to seeing you soon. Bye-bye.